Good afternoon, everyone. I'm Evan Lazarus, CEO of T3 Live, and I am filling in today for Scott on today's recap. Obviously, some stuff to talk about. We have a market that's right back to highs, and there certainly are the haves, the stocks that are performing well as the market, has bounced back in what is almost now typical fashion. And you have some have-nots. We're going to take a look a little bit on both ends of the spectrum so that you can get a sense of, what's happening overall technically and maybe where you should be spending your time and energy possibly in the next coming days, or what potentially could be happening. So let's jump over here into the charts, and I'm gonna start with the S&P index, and I have a weekly time frame here. And as I've covered this before in previous morning calls or recaps or in various outlets, the one thing that really jumps out on this screen, besides obviously price continually making higher highs and higher lows, is these rising 8, rising 21. And you've seen a market in a strong uptrend since basically January of 2013. As we look back on what has been the last 20 months, you have really just every pull-in has been bought. These are firmly in control. They still firmly remain in control. And this is really a reflection of a trend. You have a market that has a strong tailwind, and that tailwind continues to drive this market higher. Now, where's the market going to go? Again, tough to say. I'll leave that for the complete the speculators who think they have that crystal ball. I, for one, don't have the crystal ball. The market goes where it ultimately goes, and at some point there will be some sort of turnaround or counter trend trade. But for now, what I do know is that you have to respect what the language of price clearly has dictated to us for like I said, the last almost 2 years. So to be against this or to fight this overall has probably caused lots of financial harm, if not a lot of frustration, more so than anything else. And I think hats off to some of my colleagues here at T3 Live. They've done, I think, a fantastic job of trying to stay with overall macro and intermediate term trends, as well as try to navigate the ebb and flow of the short term. So what do we have here? Well, you have prior highs. We can see the S&Ps. Ultimately what happened here back in, again, these are weekly bars, so every candlestick represents 1 week of trading. But ultimately you had back in this was roughly, let's see, back in early July, you had this 4 weeks of consolidation. And I'll try to highlight that a little more as accurately right here, where you saw the market kind of grind for 4 or 5 weeks, up and down and up and down and up and down, until finally right here, I'm going to zoom in even further, right here, we had a little bit of an interesting spot, because what happened here was that the market attempted to break out. You see we broke above resistance. This is the week of July, this is, I guess, the week of July 20th. And we broke above resistance only to close back down, and what ensued was basically this failed breakout. The market attempts to break out. I'll show you on a daily chart just so you can kind of get a different perspective. The market attempts to break out. Here's that July 24th, 23rd, 24th. We jump above resistance. Market can't hold itself up here, and then what happens? All the longs, essentially, that were buyers at new highs, are trapped, and that that waterfall-like trade occurs. So we have to take note of this area. This area represented the last spot, let's call it, where buyers couldn't support new highs, and we saw some sellers step in and pretty viciously push this market down. Now, we're right back to where we started. So there's a lot of volatility in here, and this is opportunity for those short-term traders that are nimble enough to take advantage of this opportunity. You're getting some big range expansion. Some of these candlesticks on a daily basis are pretty pretty big. You're seeing that the 100 plus Dow days almost every single day. You're seeing lots of fast money up and that kind of price action. Now, for some that's great. For others, that's not your cup of tea. This is a market you want to maybe step aside and just wait for things to become a little clearer. But nevertheless, you have to respect the data, and the data supports that, you know, in the short term, we're probably a little overbought, just like we were a little oversold down here. You got a lot of people that are probably, you know, looking to see how the market reacts in and around these prices in the days to come. Now, I wouldn't, like I said, this is what Redler refers to as the cute short, but that's a tough trade to take, that counter trend. And remember, the intermediate term, which is where I started, you know, we still have this firm trend in place. So any shorting opportunities as it stands relative to the market itself are probably, you know, again, have to be very tactful and, you know, for short periods of time only until something ultimately changes in this intermediate time frame, which right now clearly doesn't, you know, we don't see that. You know, a day in this market can mean a ton. A day in this market could be, you know, there could be a changing of the guard. There could be some sort of, you know, gap up that sells off. I mean, you know, any number of things at this point can happen. And we could, you know, even to throw another monkey in there, we could, you know, make new highs tomorrow and see another, you know, a close above this prior resistance. So you really, you know, you need to approach this market right now on a you know, on a sort of a day-by-day basis. But you know, furthermore, you need to approach it with a good, sound plan. And if you're chasing highs or you're shorting lows, chances are you're not going to make any money. The traders that have been consistent throughout the last, you know, 12, 24, 36, 48 months have been the ones that have, you know, tactfully been able to step in and you know, buy when things tend to look the scariest, like they do down here, because until this intermediate term changes, or this something about the landscape of this chart and this, you know, pretty smooth, what I call the railroad tracks, these railroad tracks in terms of your 8 and 21 EMA, start to change or start to turn down, you know, until that happens, it's going to be tough to be counter to the market for anything more than just, you know, a couple of days or a week here and there. So now that I've kind of gone on and on there, but again, an important lecture to have nevertheless. You know, the first place I think we need to look is Apple. I know Scott's been pounding the pavement about, you know, Apple 100 and split adjusted. That's, you know, 700 and probably closer to 707 because, you know, we're just about the close of the day and the stock's trading just about at 101. So split adjusted, we're now, you know, 700. And if we look at Apple again, a weekly, we look at all-time highs. Let's mark off our all-time highs right around here. Again, not an exact science, but our prior all-time high was 100.75. So we've made, you know, we basically made new all-time highs today here in Apple. So again, rising averages. Look at the weekly. Again, strong, rising 8, rising 21. And this is what typically happens, you know, in the late stages of this type of a move, is you get this range expansion where the stock will, you know, rapidly start to rise. Let me remove this. Rapidly start to rise off of, you know, its short-term averages. So you need to be prepared for what the probabilities are. Trading is a game of risk and probabilities, and you have to understand, you know, the dynamic of the visual. The visual tells you a story, and, you know, trying to fight that story is always going to be a difficult fight. So I would anticipate, you know, and again, I'm not going out on any stretch here because Apple's sitting in new highs, that we're going to see, you know, probably some more momentum kick into this name before it's done, you know, before it's done, or before it peaks, I should say, in the short term. Could we see a 1 to 2 day consolidation or pullback? Absolutely, but I do anticipate the stock to continue its upward trajectory. Now, there are some stocks in here that I think are also worth noting. BITA, obviously, for those that are, you know, active in the market, this is one of those names that's been, you know, probably on everybody's radar. We'll pop up back over the weekly, very extended on the weekly. Look how, you know, you can see how it rides along the 8 until it sort of breaks away. And now it's at a point where it's pretty far extended off the 21, and chances are, you know, you have this topping tail here developing on the weekly, although the weekly's not done, and we may have seen some sort of short-term high here in the stock. So, you know, approach this one with, like I said, what's my favorite term? Cautiously optimistic. You know, I would proceed with caution there for those that are looking to, you know, ride that momentum wave. The stock probably is in need of some sort of rest or pullback. A couple other, you know, couple other big names I think worth noting. Google, Google hasn't really been sort of the standout that you would think as Apple makes new highs. Now, Google, I shouldn't say, it's a stone's throw off of previous highs, but certainly doesn't have the momentum or clearly the drive that some of the others have. It did pull back. We have seen it snap back. It's kind of in this no man's land. I think a couple of days of consolidation here for Google, could get it back in the game. We could see some new highs, but for now, I would step aside and let it sort of develop. A couple off the radar names, and these are names from our off the charts products. LYB, nice breakout here that was suggested a couple of days ago. Under Armour still continues to act well. Again, you can see trading stocks that have good tailwind is really sort of the best approach. And even if those stocks aren't making new all-time highs or there's not a ton of momentum in there, they're still very low-risk situations. And you're probably, if you find a stock that has, a good trend and a rising 8 and a rising 21, and it looks the part, it should act the part. So even if it doesn't make you huge gains, you probably are putting yourself, you're not putting yourself in harm's way. And that's always a good thing as a trader. Facebook again continues to, slowly, start to tick up again. Again, another breakout trade through 74. Not a ton of momentum here with the market making new highs. So you definitely might say, and I'm sure Scott will say in the morning call, not really showing the relative strength we'd like to see. Obviously, as markets make new highs, you want to see stocks, show you that thunder to the upside. Chipotle again seems like it's found a little bit of resistance up here on the high 680s. But again, not breaking down by any means. Could just be resting for another breakout. But as the market again continues to break higher, you'd like to see some of the, some more push here. But it seems like it could be stalling out as these things are. Again, always go back to your weeklies. Short term, could be a little extended here. A couple of tails over the last couple of weeks, and not really a whole lot of energy in some of these names, and that's fine. I mean, a lot of this stuff needs a rest, and has seen big gains. But then there's also a couple of other stories out there I think are also interesting on the other side. We saw energy, some of the energy names, Conoco, had some pretty sharp move down. Exxon hasn't really been able to get itself going. Some of these big energy names that have made a lot of people a lot of money over the last couple of years, just not really quite doing what you'd like them to do. Again, not all, but there's a handful of them. Baker Hughes, excuse me. Again, not necessarily the best looking charts out there. So there are things that like I said just when I started, it's the haves and the sort of the have-nots. And but this is a market for those that are that are thriving on the volatility, and I hope you all continue to do well. I have to run. It's been a great recap. I'm glad I had this time with you, and I will chat with you soon. Have a nice day, everybody.